Stick with EVs here. Tesla falling again today as the company announces price cuts to the Model S and Model X in China.
Meanwhile, Goldman Sachs recommends Toyota Motor, given the company's strong EV potential.
We remain firmly bullish. I mean, I view this as more of a sell-off post-quarter, worries about China. But Brian, me and you've talked about this. They're cutting prices, going for volumes. That's the right strategic poker move for Musk and Tesla. I think it continues to really be a land grab opportunity for them.
In this video, Tesla continues its ruthless land grab in the EV war. A very intelligent stock analyst, who certainly won't be laughed off the face of the planet, recommends investors buy Toyota stock in August 2023 due to their EV potential. And we run through the possible implications of Tesla price cuts on margins, volumes, and profitability. Speaking of profitability and, dare I say it, gravy trains, I've just posted an exclusive video to my ex-subscribers. More evidence that the man who said he could out Elon was right, that execution is the easy part, why you should always trust narcissistic, sociopathic con men, and why everything's going to be fine with Nikola, except they've just recalled a bunch of their vehicles. In fact, all of their battery electric trucks because of a spontaneous combustion event. Who could have seen that coming? Check the link in the pinned comment to subscribe over on X.
Let's take a look at shares of Tesla trading lower, down about just over 2.5% after more price cuts in China. The EV maker slashing the prices of its Model S and Model X each around 7% in China. This comes against a tough backdrop economically, Shauna. When you think about what's been playing out in China, we were talking about this yesterday, the latest economic data pointing to continued weakness in the market.
That's right. It's anything but smooth sailing in China. Not just the automotive market, but the broader economy, although that's true of many places on Earth right now. Now, for those who don't know, we've been hearing reports now for months of extremely heavy discounting on internal combustion engine vehicles. Why? When the CCP wants something, they get what they want. The CCP wants people to buy electric vehicles and to stop buying internal combustion engine vehicles. So many companies are now manufacturing vehicles. They're struggling to sell to consumers. It's quite difficult to register a new ICE vehicle in China. What's the solution? Extreme discounting on ICE vehicles. It's better to be selling an ICE vehicle for 0% margin or negative 35% margin than not selling it at all. This is resulting in extreme pressure over the short term on electric vehicle sales. If you're thinking about buying a new EV, and suddenly you can buy an ICE vehicle for half the price it was a few months ago, that can change the equation and your ultimate buying decision. Over the long term, this will all be meaningless. It's a blip on the radar. But over the short, maybe medium term, expect extreme volatility in the automotive market, not just in China, but China in particular. The fact that Tesla is still selling through production with industry-leading profit margins, despite this being the worst possible time for the automotive market globally and in China specifically, is incredible. It's as bad as it gets unless World War III breaks out. The fact that anyone's making any money selling vehicles is pretty impressive. The challenge is there's not a lot of visibility in China, so second and third hand reports are all we've got to go on. But from everything I'm hearing, reading and watching, it really seems like the shit is hitting the fan in the Chinese automotive market. And this is causing a lot of people to draw very faulty conclusions about the medium and long term for the electric vehicle market. EV demand slowing down. EV adoption is going to be slower than expected. No.
Should know these price cuts coming back in the market after Tesla, along with 15 other car makers, essentially signed a letter saying that they won't be competing under abnormal pricing.
I'm not sure this is entirely accurate. I did cover it at the time, but it appears since then the agreement around pricing has been walked back. At the time, it sounded like there was going to be an agreement between automotive manufacturers in China, not price fixing per se, and that's super sketch, but to agree not to try and kill one another by sustaining stupid losses for extended periods of time. E.g., if you've got a huge amount of financing available, sell your vehicle for $20,000 less than it cost you, just so some of your competitors go bankrupt because they can't sustain those losses for the same amount of time. That's what the agreement appeared to be about. But since then, we've heard reports that this is completely gone. There is no agreement around pricing. But again, there's a lack of visibility. If anyone has any clarification on that, let me know in the comments below.
But this shows you how competitive the market is, and Tesla certainly not alone in pushing for this. Their Chinese rivals have been cutting prices as well. But, you know, I was thinking back to the comments that we got from RBC's Tom Narayan yesterday, who said there's too much concern around the price cuts because at the end of the day, if you've got higher volume, even with the lower margins, that's a positive for the company.
Now, putting aside the fact that Tesla is low-key seeding the Trojan horse known as vehicles that in the future can operate as robo-taxis, print insane amounts of money, almost pure profit, Forget that, although it's kind of important, and forget the fact that each vehicle on roads is collecting more data, and of course, addressing Tesla's mission of accelerating the world's transition to sustainable energy. Let's look at some numbers to illustrate this point. Lower margins, higher volume. What could this look like? Here's a hypothetical example. Don't be a Poindexter, I'm just illustrating the point here. Just imagine that you're selling a vehicle for $69,000 with a 30% profit margin. You're making just over $20,000 per vehicle sold. However, due to the price point, you're only able to sell 42,000 of these vehicles per whatever time interval. Your total profit on those is $869 million. What if instead you slash your price by $10,000? Now your margin falls to about 22%. You're only making a bit over $13,000, not $20,000 per. However, your unit sales double because that linear decrease of $10,000 means an exponential increase in the number of people who can buy it. You've literally doubled the number of people who can afford and are now buying the vehicle. What do you know? Despite the fact that your margin has plummeted, your total profit now is about $1.1 billion versus $869 million. Taking it a step further, if you shave a few thousand more off the purchase price, and these are now $55,000, a 14% profit margin, you're less than half the profit margin you were at $69,000. Profit per vehicle now, just over $7,500. However, you've once again doubled the number of people who can afford and are now buying your vehicle. Your total profit, $1.23 billion. And this is the point. Again, putting aside the stuff with autonomy, the data, the whole robotaxis thing. Providing you're still making money on every vehicle sold, giving away a little bit of margin to keep selling through volume can actually produce greater total profits because more people can afford your vehicles and therefore buy them. Food for thought.
Yeah, and that's at least, it seems to be how Elon Musk is looking at it, because he's remained, at least for now, committed to these price cuts, always leaving the door open for more. We talk about the demand picture, what exactly that looks like. Obviously, over in China, the very, very slow recovery that we're seeing, all the problems, the disappointing econ data that we've gotten out over the last several weeks, certainly painting a tough picture for Tesla and obviously those domestic players there. So Tesla needs to do all it can to better compete with those domestic players. How much pressure this is going to place on margins, at least in the near term. We see some analysts a little bit more concerned than others. Dan Ives of Wedbush is also one of the analysts that does think it's a smart play in the end and will eventually benefit Tesla. It could put some pressure, though, on the stock in the near term. And we are seeing the stock off just around 2.5% today.
Speaking of Mr. Green Tidal Wave himself.
Tesla, you've been very bullish. You've been very right. But I will note that Tesla kind of quietly is down 20% in 1 month. They just cut car prices again in China. Are you concerned? Do you still remain bullish?
We remain firmly bullish. I mean, I view this as more of a sell-off post-quarter, worries about China. But Brian, me and you've talked about this. They're cutting prices, going for volumes. That's the right strategic poker move for Musk and Tesla. I think it continues to really be a land grab opportunity for them. And I view this as an opportunity. I think as we go into the rest of the year, demand will be firm going into next year, especially with Cybertruck. I think it's a table pounder at these levels.
Table pounder at these levels. There you go. Well, if you like Tesla before, you just got a 20% discount.
Well, Dan Ives seems to get it. Tesla rightly prioritizing volume. Cybertruck just around the corner. Stock already a great deal. Now it's 20% off. And then there's the whole autonomy thing just around the corner, which most investors seem to have forgotten about once again. Price discounts, margins down, end of the world. It's going to be very, very, very fun to revisit these videos a few years from now when Tesla robotaxis are beginning to roll out around the world. They're printing crazy money, almost pure profit. Tesla has its AWS moment. And many investors lament, man, I really wish I'd seen that coming before it happened. Oh, I'm just kidding. Tesla's never going to solve autonomy. Don't buy any stock. I'm still buying myself. Thanks.
Tesla slashing prices again in China. The move by the automaker sparking concerns of fueling the bruising EV price war. Meanwhile, Goldman Sachs recommends Toyota Motor, given the company's strong EV potential amid the competitive market.
Is this real life? In August 2023, somebody from Old Man Sachs is recommending investors buy Toyota stock for their EV potential. Is this a setup? I just don't even have the words. Is this real life? Are you kidding? Man, those shrooms mustn't have worn off yet. Jesus Christ, I just can't even. That obviously didn't actually happen. We have to move on. There's no way there's an Analyst, especially from the world's second largest investment bank, recommending Toyota stock due to their EV potential. There's zero chance that actually happened. I imagined it. Let's move on.
Let's focus in on Tesla and what is going on there. We already, of course, have seen a lot of back and forth price cuts in China, sparked initially by Tesla. It looks like that they are cutting the
priciest models of their various vehicles. Their long range and performance versions of the Model Y are being cut, according to its Weibo account.
Model, at the end of the day here, for Model Y and the SUV that they've tried to continue to make sure that they have traction with, especially at that upper end, as you were mentioning, within China, highly competitive market where there's a lot of EV plays that is exhibited through some of the targets that Toyota has.
Oh, shit. I didn't imagine it. This is really awkward. Now, okay. I just don't want to kick a potato when they're down. Toyota's targets, last I heard, were as follows. In 2030, Toyota expects just 1/3 of their vehicle sales to be electric vehicles. In 2030, this begs the question, what are the other 2/3 going to be, Toyota? You fucking idiots. And the answer is, electric vehicles will be all of Toyota's sales in 2030 if they're still in business, because no one's going to be buying ICE vehicles. Hybrids are a joke, they're going away. And hydrogen makes zero sense. Imagine being a large automotive manufacturer today who are aiming for just 1/3 of their vehicle sales to be electric at the end of this decade, expecting there's going to be consumers still lined up to buy millions of ICE vehicles and maybe millions of hydrogen and or hybrid vehicles as well in 2030. Imagine not only that, but being a stock analyst who's so fucking dumb that you don't see this as a problem. And to take that a step further, so blind, incompetent, just fucking brain dead, that you can't look at Toyota's history, their failure to recognize and move towards electric vehicles, their complete and utter incompetence in this area, to see how far behind they are, and to be recommending investors buy Toyota stock based on some embarrassingly low electric vehicle targets from a company that have proved themselves utterly incompetent and completely blind. In other news, Goldman Sachs are currently recommending investors buy Blockbuster stock, Kodak stock, and load up on pets.com.
Which was one of the reasons why Goldman Sachs was very bullish about the potential there, saying that the targets that they've set forth, 1.5 million by 2026 in terms of their EV potential there, and then 3.5 million by 2030. Now, if you're thinking, all right, well, what about Tesla? Now, internationally, Tesla has been looking at figures, at least as of last year in 2022, about 1.3 million. So all of these things considered and the markers that Tesla has already hit versus some of the targets that a Toyota has in China and more broadly as well. But then additionally, the plays from Ford, the plays from GM, there's going to be a ramping up of so much of the production of electric vehicles. The larger question is for the pricing strategy, and that gets us back to Tesla. They may be looking through the consumer environment right now and just saying, how do we slash prices enough to make sure that we're in garages or that we're in driveways to pull people into an ecosystem, and then the job is just retention and keeping them there, hopefully. And that could come in a myriad of different ways. But for Tesla, at least, that seems like what's at play with the strategy right now, too.
Yeah, although there are questions about, to your point, about what it's going to mean for the margins here. And at least one analyst over at Evercore ISI said that these cuts in China could presage cuts in Europe and in the United States as well. Yeah. And remember, we already saw Tesla's production numbers coming out of China, shipments coming out of China down 31% in July. So that's something to keep in mind, too, when we're looking at all of these dynamics. And as you mentioned, the competition in the Chinese EV market is probably the fiercest of any EV market in the world right now. There are a lot of homegrown producers that it's just a totally different dynamic than it is here.
And one of the parts of that dynamic is also government driven, too. There are mandates now that have been steadily increasing for the past few years for auto manufacturers to have to produce and sell a certain amount of electric vehicles. And that moves higher every single year.
As I said earlier, when the CCP wants something, they get it. And this does have very important implications for the automotive market in China. Force companies to make a certain number of electric vehicles, make it almost impossible for new purchasers of ICE vehicles to actually register them to be able to legally drive them. It's going to cause some serious pricing pressure. Like I said, pay attention to the Chinese automotive market over the short and medium term. It's going to be very volatile.
Until they get to a set percentage that the government could either stand by or move even higher from that point. But it's all in order to have more of an environmentally conscious landscape, especially when it comes to auto production, and what had previously and historically all around the world been an issue within the internal combustion engine vehicles and the contribution to some of the greenhouse gas emissions there too.
Right.
Is this a surprise that we see more price cutting from Tesla in China?
Spoiler alert, no. And it won't be surprised when we see continued endless price cuts on Tesla vehicles, all models, on average, over time. It's kind of in their secret master plan. They're not going to sell 20 million vehicles a year at today's prices. Good news is Tesla's cost to produce vehicles is trending down as well and will continue to do so. And then there's the whole thing that they showed us at Investor Day 2023, the modular manufacturing system, taking rare earth materials out of the electric motors. Long story short, resulting in a 50% cheaper, compelling electric vehicle, first to be produced at Giga Mexico. Early works beginning there now. So don't be surprised when more price cuts happen, and then more, and then more. And then new vehicle models come out that are significantly cheaper than the already much cheaper current models. And this will keep going on all decade and then into next decade as well.
We may have thought that we were done in China. You mentioned off the top sort of signs of abating. We even had a sort of curious announcement of an agreement among manufacturers to kind of call a truce. And that lasted all of a couple of days. I think what we learned in the sort of following weeks was, from Elon Musk himself talking about this idea that, price cuts, he would not rule out continuing to bring pricing down. He specifically was citing interest rates. I think rather than that being a factor in China, it's more a factor of just the amount of competition in that market, how competitive it is, how crowded it is, and how much the Chinese manufacturers in particular have really proven strong. I think BYD in particular is really bringing up an awful lot of volume and creating a lot of competitive pressure for Tesla to have to answer.
Right. It's really interesting to look at the way that the competitive pressure is the same and also different in different geographies. So why is there so much pricing pressure from this competitive environment then in China?
I think we're seeing a pattern of sort of, as costs come down, as input costs come down, we saw the last couple of years, not only the semiconductor crisis putting some pressure on companies, but also raw materials for batteries. So lithium and nickel prices in particular really being a difficult challenge for these companies to work through. Those prices have come back down. We've seen, with China having this huge lead in terms of getting a battery supply chain up and running, we tend to see, as prices come down, China, price is able to come down first. And so perhaps we see that spread to other markets.
Well, yeah, as costs to produce electric vehicles comes down, and they will, doesn't matter who's making them, economies of scale, new innovations in manufacturing techniques, more availability of resources or deleting said resources from your vehicles, therefore you no longer need them, costs will trend down over time. I don't think people are really getting this. Maybe folks who watch this channel regularly are, but I don't think the average consumer understands. By the end of this decade, buying a compelling electric vehicle that absolutely smokes an internal combustion engine vehicle on everything, safer, faster, more range, way cheaper to own and operate, much better technology, will be a fraction of the price of an internal combustion engine vehicle today. Not similar, not a little bit cheaper, a fraction, a literal fraction of the price. For more, see Wright's Law.
Perhaps that spreads, which is interesting in terms of read across into Europe and elsewhere. So we've seen this weighing on the share prices of some of the manufacturers in China. Is there hope that this stabilizes just briefly then, Craig, from here?
If you're looking at Tesla, I think the big sort of reason for hope in the next few months is Tesla did announce that this quarter they were going to take some downtime at their plants globally. And so there's some hope that that is related to factory upgrades to make new versions of the Model 3. If they have some fresher product, perhaps that can support stronger prices.
Odds are this is exactly what's happening, although don't discount the possibility that while Tesla is doing this, potentially upgrading production lines for a refreshed Model 3 and or maybe even Model Y, they may also take this opportunity to implement some new manufacturing innovations from one platform to another to further reduce the cost to produce their vehicles. Customers might not notice stuff like that, but Tesla investors certainly will when it flows through to the bottom line. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. It certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point. It's something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy, wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it, you'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, Snake Oil Salmon's sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links in the pinned comment. See you over on Twitter and or Patreon. And don't forget to grab your AG1. Love ya.